Very good morning to you. Welcome to Trade Live with IG with myself, Rich McDonald, and Claude Beecham. How are we doing?
I'm very well, thank you. How are you?
Very good.
Why am I Claude? Why am I Claude this morning?
No,
I'm a source of all knowledge. Is that what it is?
The source of all knowledge. There is nothing artificial about your intelligence.
No, not at all. No. Not much intelligence about it either. So.
We haven't even had a chance to say good morning to each other. So good morning, Chris.
Good morning. How are you?
I just had to run in the studio. I was giving Minnie Cooper an order in Lloyd's for the opening auction, and yeah, we had to. I have to phone it in and everything now.
Of course you do.
Sure. I mean, if I say it on TV, then there's a record of it, right?
There, exactly. Yes. Manipulating the price.
Good. So let's have a look at what's coming up on today's show. We got myself and Claude through till 8:35. At what point we've got the wonderful Garth McKenzie coming in, one of the top traders that we speak to, of course, because he has interviewed all the other traders and gathered their knowledge as well.
That's very good. Yeah.
So yeah, Garth, looking forward to having Garth back on the show and his market view as well. And then, well, I think you should be taking us through the second page there.
Well, 9 o'clock, it's back to you again for the opening bell, and then me from 9:10 for about 25 minutes. We'll be doing Trade of the Week. What was last week's? Oil was last week, wasn't it? That was good. Let's see if we can get another...
Short oil.
No, long oil. We were long oil last week. And then, of course, it slumped, didn't it? So we'll see where we ended up anyway. And then 9:35, Aaron and Martin will be talking through man versus machine. What's this one?
Oh, have you not seen man versus machine?
No, I haven't.
Oh, it's great. We'll go through that in a little bit. Right, good morning to you all. Catching up with the chat here. Good morning, Boise. Nice little chat on Friday afternoon with Boise. Was right up until 1:29 p.m.
Yeah.
And then, of course, the world unleashed this beautiful thing. A beautiful big unemployment number.
Fake numbers, clearly.
Fake numbers, indeed. Mango, a very good morning to you. Always good to see you on, sir. And Andrew McKelvey is telling us that senior is pleased with its interims. Is that...
Yes, that was one of the... There wasn't exactly that many numbers this morning, but senior was one of them. Strong set of results in the first half. So compared to last week, where everyone was reporting numbers all week, it's calmed down a little bit still, although, of course, we do have Palantir today, don't we?
Oh, we'll get onto that, don't you worry. Wiz, pleased with its growth in traffic, says Andrew. And SWC have raised a relatively further sum, I guess a relatively small. I'll have a look at that in a minute as well. I haven't noticed that, Andrew. Thank you very much. And BP announced their biggest discovery in 25 years. Andrew, we need to get you on the show. You should be on the payroll.
Yeah, exactly. We're across the RNSs this morning.
Right, that and other things to come in overnight action. So let's start with, actually, shall we do the week ahead at 8:15?
You're in charge. We do as you are told.
Let's do that, because that's
There's enough going on already.
Your wonderful piece that you like to put out on a Sunday afternoon.
It goes out Sunday afternoon, 6 p.m, yes. Although it always gets written on a Friday. Fun Friday to write it, surely. Good old day.
Doesn't Claude work on Saturdays? Let's have a look at the futures and see what happened there on Friday. That's right. It starts with a 6 and a 2. It's not a 6 and a 4 anymore. Small bounce in the S&P 500 after that Friday job roll number. So let's we'll have a look at that in a moment. But oh my goodness me, what a drop we saw. FTSE 100, absolute bulletproof. 9,090 immune to any sell-off there. But not in Germany. Germany got a right kick.
Yeah, very heavy losses, even bigger as noticed than for the Nasdaq, really. So we saw the DAX go 1,000 points. Both the DAX and the Nasdaq had about 1,000 points wiped off them in the space of 2 sessions. So not a bad move to the downside if you're looking for this kind of thing. It's just maybe a shame it arrived so quickly. I suppose maybe it didn't.
Quickly? We had to wait weeks for this. Weeks, I tell you.
Weeks, and then 2 back-to-back heavy losses days come at once. They're like buses, really.
Yeah. Gold, really good surge higher in gold. That was the obvious trade of all of them, I would say. And then iron ore higher this morning. And copper continuing. And it was nice to see copper get a small bounce while oil sold off. Because, of course, recession concerns, growth slowdown, unemployment higher. That was another relatively obvious one. Gold, oil sitting up there at 60.
Yeah, because it rallied on a sort of hopes that, or worries that there'd be more sanctions on the Russians. So the fact that it then came back again so quickly was quite interesting, I think, really. But it's so much going on last week and so much to sort of digest from Thursday and Friday that it's very hard to keep up at the moment, isn't it? You had Microsoft topping $4 trillion in valuation, you had all the tech earnings, and then suddenly it's will they, won't they on September, because you've gone from Wednesday evening, Fed nothing doing everybody, to Friday, markets pricing in again, much bigger chance of a September cut.
That's right. So Powell set us up for the beginning of the sell-off. Yeah. Let's have a look at the 3-day chart there. And so this has gone back to Wednesday. That was the little move down on the Fed. And then we saw, of course, because we had those Microsoft numbers, and then we started to get the whole travel and arrive move. And then only this is the jobs number here. So why are we talking so much about jobs? Well, let's look at how they were. Now, I have to go to the week before. Previous week. And taking us through. What was the weakness from Chris Beecham?
Oh, now you're talking. Now you're going to put me on the spot. What did we get? Well, the main problem was that it was a very poor jobs number overall, but obviously the revisions, and this is the thing we'll come to a minute with the
that was what I was going for.
So the average hourly, obviously the 14K, a very weak number really, still positive. Unemployment rate up again. But the fact that the previous month has been revised down, was it net 258,000 jobs were wiped off that had existed but didn't in fact
from previous 3 months.
Previous 3 months meant that obviously this was taken as a very, very poor jobs report.
I think she deserves to be sacked.
Well, I think, and there was
you're overrepresenting.
I don't think you're overrepresenting. I think the way that, and this following one of the former White House chief economist guys was saying, he worked with her for years. I think it's the way the survey is done, because obviously the Bureau of Labour Statistics is simply dependent on companies sending this stuff in on time. Yeah. And if they're pushed for time, they don't get it sent in time, then it gets put into the next month's number. So that's why you get the revisions. And so it is not some sort of conspiracy to make things look bad and then look worse.
But it is partially her fault that rates haven't been cut. Because had this data been correct and collated correctly, as you'll see on screen now.
It was collated correctly. It's just it doesn't arrive in time, so you can't make it. I think it's unfair to say she hasn't done it correctly. I think
that's maybe part of your job, isn't it?
But if the Bureau is being underfunded, if there's not enough money going around to sort of provide the people to do this,
then sack the boss and spread that money out.
Well, you could do that, or you could. It seemed to be a hard pick. I think we know which side you're on here, but you can either have a cheap Bureau of Labour Statistics that doesn't get it all done on time, or you can have one that's properly funded. So which would it rather be? But it is particularly funny that, as the FT said this morning, you are damned if you do and damned if you don't, because Powell spent Wednesday saying how strong everything was and how good things were going and got slated for not cutting rates. Mm-hmm. And then the jobs numbers come in and look awful. And then he gets slated again for not cutting rates because, suddenly making the economy look bad was obviously one thing he'd said, but also that they weren't moving quick enough. So which is it?
What would the market rather? Would it rather have a strong jobs market, strong economy and good earnings? Or would it rather have the truth that we knew was the case, a slowing economy and the risk of earnings forecast coming?
Well, clearly the market would rather have good news. It would mean that a Fed rate cut is less likely, but if it's rate cut or earnings growth and jobs growth, clearly you'd want that. Yeah. And that's the thing that will drive the market more sustainably in the long term, because the worry, of course, is if they do have to start cutting fast because things are getting worse, that should require a re-rating in stocks, particularly at these levels.
So let's have a look at the September expectations. So expectations for September rate cut have shot up from 62% to 80% for rate cut on the 17th of September. In October, we see another one. A further rate cut coming with a 60% chance, having previously been down at about 31% post-Fed meeting. And then December, there's a chance that we see a third one, that currently sitting at 50%. There's even talk of a 50 basis point cut, which was started, I think, by CNBC.
Yeah, probably. But it's enough to believe it. I mean, if not after that jobs report, then when, I suppose, is the fair thing to say. Yeah. You can argue, and I was talking about this with Reuters on Friday, about is this just a sort of replica of last August when you had that vol scare with the Nikkei and the yen, and you had this brief sell-off in markets. It didn't take very long.
Yeah, that was like 48 hours, wasn't it?
Yeah, exactly. This one might be a bit more sustained, but
this is real.
This is real. You can argue
that's 3 months of.
If this is the Liberation Day stuff, the panicking from companies about tariffs and how that's going to affect things, how that's hit investment, then we will start to see this filter through in the months to come. But if this was kind of all the bad news is now in, and we see things maybe steadily recover in the next few months, that will be the key thing to watch, really.
25 basis point cut, does that stop a recession?
No, not really. If one is coming either way, particularly, I think. Yeah. And that's obviously all the things that we pointed out the first time they started cutting rates was there are different types of rate cuts. There are good rate cuts and bad rate cuts. And there are rate cuts you're doing to sort of just keep the economy humming along nicely and not be too restrictive. And they're the ones where you go, oh, those are bad rate cuts. And then that's when you look at how the stocks perform around rate cuts, because it depends on what type of rate cut you're talking about. Yeah. If it's a 50 basis point cut, and usually when it's, and I know they did it last year, and I think it's probably was a mistake from them last year to go 50 when they did. But usually if you go 25 basis point cut or an increase, it's kind of saying, we're in control of this, we know what we're doing. If it gets to 50 basis points, it rapidly lurches into, oh, something's broken, we have to react to territory. And that's not good for central banks to do, because it just shows you that the situation might be getting out of your control.
What suddenly starts to look a lot more attractive? My eye went straight to gold. Yeah. Because easing monetary policy, a slowdown in earnings, you don't want to be in the S&P 500 at 23, maybe 24 times earnings if you're at the start of a cutting cycle. Earnings being cut. And you're restrictive. You know, the neutral rate's what, 3.5?
Yeah. And the Fed is well above that. Really, if you look at the sort of inflation levels where the Fed is now, then you can argue policy is still restrictive.
So the brake is very much on, and is only going to be eased off slowly, right? December, we're still going to be restrictive. Yeah. So we've got, you know, almost negative jobs numbers. We've got the Doge restriction on hiring at government level. We've got tariffs only just coming. Yeah. To me, that's all.
I think you can spin a very strong bearish narrative about this that says people should be concerned. Now, again, because you've had this 2-day slump in markets, there's got a lot of that priced in the short term. Does that mean actually you get a bit of a continued recovery this week? It's really interesting if you look, and this is a very small data set, but presidents in their second term in the 20th century, you've never had a positive August. It's only about 6 of those in the post-election year, but none of those have ever been positive. So it's interesting that history is not on the side of a continued recovery for markets in August.
Okay, so August we should be careful for the next few weeks. We're it's funny, we're getting a row in my ear. Chris Beecham, stop clicking your pen. It's because he's a nervous bull. The bulls are getting nervous. They're starting to sweat, click their pens.
You can't really be nervous if you've been given a 30% bounce in the Nasdaq and you get a 5% sell-off over 2 days. That's kind of how markets work, isn't it? The Nasdaq plunges to levels not seen since 2 weeks ago. You know, it's not exactly the most dramatic headline that's ever been written, is it?
Well, but that's an interesting point in that, yes, we're where we were 2 weeks ago, and suddenly we actually have found out that 3 months of really bad jobs numbers we've been lied to. So
not-
should it be
we've
where
not
we are?
been
We have been
lied
lied
to.
to. That's the real number now.
Well, yeah, because the statistics have come in and the revisions have been made. It's not that the BLS is deliberately hiding this.
No, I don't mean lied to by the BLS. We have been lied to, and no matter what way you frame it, the market has been trading higher
On the wrong number.
on a fake number.
On a number that isn't.
So should we be up here, or should we be actually where we were 3 months ago? Because the economy's been bad.
But then, of course, we have to play sort of second order bingo, don't we? Because then we go, well, is the market now pricing that in so it can move on from that? Because the market's now looking ahead to the recovery of the improvement in jobs that we might get.
That's what I'm saying. You're not going to get a jobs recovery with AI coming in and rates still restrictive until December. The recovery starts in 2026.
Well, this is why payrolls next month will be very interesting. Not to trot out the tired line, but it will be the most important payroll reading since the last one. But it will be, I think, in the same way that earnings season is always the most important earnings season since the one we just had. And that's the interesting about this earnings season as well, because if you to talk to your point about AI, it's been a season of AI and tech companies doing reasonably well and okay in some places, and the old economy, the physical economy like Ford and this kind of stuff, still struggling. So the bifurcation in the US is somewhat concerning.
Yeah.
And our market's ignoring that really at the moment.
It certainly doesn't help the dollar bulls, does it?
No, and it certainly delivered a check to them on Friday, didn't it?
Yeah.
The dollar index slump, wiping out the substantial rally you'd had off the back of really people saying, no, there won't be a rate cut, and suddenly we're back again. And obviously the fact that the end decided to fire a statistics chief. And also it was non-markets news, but over the weekend it was revealed the Smithsonian's they've got an exhibit on presidents, and they've removed Trump's name from the list of presidents that seriously risk losing office because of impeachment. And he asked them to take his name off it, and they have done. So it's this kind of what is happening in the US.
He's been speaking to Erdogan, hasn't he? Asking for some tips.
Yeah, exactly. If I was going to be an authoritarian, this is how I'd go about it.
Yeah. Fantastic. Well, is Powell next? That's the big question. He said no. But when he is putting a 39% tariff on Switzerland just because its budget deficit with the US is 39 billion, then you start to think like, numbers are just being made up.
We've forgotten how bonkers the maths were around these tariffs in the original. It's just
Tariffs,
how they worked them out.
love the tariffs.
Yes, everyone just agog at how badly they were done.
Yeah.
But yeah, a lot of commentary on Switzerland, people asking about that, how the Swiss market's going to open this morning, certainly, because to see that, I mean, the most inoffensive country on the planet, really, aren't they?
Well, how dare they export gold to the US when the US has asked them to?
Yes, all this kind of thing.
Nothing to do with them.
Successful pharmaceutical companies, all this kind of thing.
Yeah.
Our morning call on Friday was Tariff Man is back, and I think it's still the case that he's not gone away. Now all the news is now in. Is it back to deal making now? This is what people will now rush back to Washington to cut deals.
So they haven't been invited.
No. Okay.
So a little bit worrying. The Swiss have 5 days to rescue this. Futures currently looking down 2.4%. Swatch is looking down 5%. Richemont not much further behind it. UBS down 1.6% in the ADRs on Friday. But we are going to keep a watch on Switzerland. Not one that we usually watch.
No, I confess.
But we'll have a look at that at the open there. What else do you fancy having a little look check into?
Gosh, what's been going on this week? What's happened last week? So much. I mean, tech obviously was the big mover. We had 4 more of the Mag 7, didn't we? 1 more to go. Nvidia, which is still 3 weeks away or so. So that was perhaps the really popular thing.
Well, we've got
Amazon, the big loser, of course.
Yeah. We got a little bit of brightness for you. FTSE looking up 40 basis points, CAC up 60, and the DAX up 40. So Switzerland really the underperformer there, of course, closed on Friday for National Toblerone Day. And
the Hang Seng is something like 400 points off the lows, isn't it? So that again, if it is a recovery, this is how you'd want it to start. And I'm not saying it will be, but if you look at stuff like the Hang Seng, it found a low, and it had already collapsed, if you like, from the 24th of July highs at to 25,700. So we'd already had a decent correction in an uptrend for the Hang Seng. Maybe this is just the US and Europe playing catch up in a very short space of time.
Yeah. And then this is the Nikkei, if we want to have a quick look at how Japan's traded. That's over the past about 10, about two weeks. 2 weeks worth of Nikkei there. So giving up the gains on Friday.
It does make you think if this is how it's going to trade. It's a bit like 2017, that it has a couple of days of sell-off and then we go back to rallying. And as we've said before, that kind of pushes out the volatility to further in the future. And usually when it then comes, you sit on the pot and then suddenly it explodes. It will be much more dramatic when it arrives.
Yeah.
But it does feel like this is still a market that is, even with all the bad news, markets climb a wall of worry, blah, 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 that it's still happy to rally. Because it's just not a bad start to the week for futures, is it really?
Well,
it's not much follow through so far.
Oh, don't go against the Lord Art Cashin,
What's he said now?
godfather of New York Stock Exchange. Well, he's not said anything.
Well,
He
no,
passed
he
away.
passed away, sadly.
But the market never bottoms on a Friday. If you close at the lows on a Friday, he always said, just be wary, step back, because Monday might be a bit tricky. Let's have a look at Bitcoin there. I see Poppy saying Bitcoin bounced from its key levels. Let's do a little 3-hour chart.
All the charts look the same, don't they? If you look at those daily charts, you've had a bit of a sell-off, and then it's already started. That 50-day moving average for Bitcoin, if you're looking at moving averages, that seems to be providing support, possibly. Maybe we'll put it down as trade of the week. Who knows? We probably won't, actually. But
Charting crypto, we'll have a look at it.
Crypto will undoubtedly cover Bitcoin. But
Are you confident in $300 of EPS for the S&P 500 next year? Haven't seen these numbers.
no. I think you've got to be very wary about how the next few months pan out. But then, again, it is markets do climb this wall of worry, and they have weathered this quite well. Again, if we talk about the amount of money that must have sloshed out of US markets on Liberation Day and all the fund managers just cutting back, if you've watched it rally and rally and rally for 2 months and then suddenly you get a 5% drop in 2 days, you're going to think, I'd like to buy that now, please, because...
But that's the problem. And that's exactly why the futures are up this morning. It doesn't mean it's right.
No.
It means that everybody is in that mentality of, you only ever get a 2-day drop. This is a bargain. I'm going to go in, I'm going to buy the futures, and then boom, right in your face.
You're going to keep clapping to annoy the gallery. Is that what you're going to do? Yeah.
Wakey gallery.
But this is it. And you've had a spike in volatility off the July lows a couple of weeks, or just over a week ago.
So would the futures going negative worry you today?
Well, I don't...
The buy the dip, when we know that our good friend from our podcast, Mr. Spice, he is a buy the dip. He's a BTFD.
Well, you've got to be... There are dips and there are dips. And what's that line in Livermore's book about reminiscences of a stock operator? It says you can't tell till you bet. Because they'd asked this old guy, I think they called him the turkey, and they'd ask him what he thought of something. He said, you can't tell till you bet. And it's that kind of...
I like that. Polymarket's great for that.
You just have to sort of wait and see. And if you say you had a reversal in futures today that took us, I don't know, over the next week, 1,000 points lower, let's be dramatic about this. Let's say the NASDAQ goes back to 22,000.
So 4%.
I kind of prefer that.
Right. Yeah.
I kind of prefer that than if it does just bottom now and off we go again. That would almost worry me more in the long term, because you have to have two-way action in a bull market. It has to go up and down. If it just keeps going and going and going, not only is it a pain to get on board because you just don't get dip, you just have to have it go up and down.
The S&P going back to 6,350 means that it literally is completely ignoring fundamentals now, and that only happens in one of these kind of
melt up euphoria phases, things getting a bit silly, yes, and then eventually you have to pay the piper.
Yeah.
So, but that could, as we've seen so often in trading, if it goes and goes, you just, it should have a correction. Well, it will do, but not when you want it to.
Yeah.
That's the problem as well. You might just have to sit and wait till, I don't know, October, November.
That's its patience, yeah.
So what are you going to do?
Right, how are you feeling about August? Was the poll from producer Paul. 81,
That's the kind of answer I like to see.
81% bearish.
That makes me feel a lot better. That makes me feel a lot more comfortable about the market.
Yeah, 9% are with you.
Yeah, that's better. I like being a contrarian. As long as everyone's still not believing the rally.
It doesn't mean they're positioned that way. How many of the 81% are short?
Yeah. And they have to send in their client account numbers. No, we can't do that.
Good. Okay, it is 7:55 already. How did we get to 7:55? We haven't even covered Lloyd's yet. Let's cover Lloyd's very quickly because this is an important one for the auction. We are going to be watching. Lenders in car finance scandal brace for judgment from investors. But it was good news on Friday from the Supreme Court. So the Supreme Court making a ruling that the FCA now believes the redress scheme could cost between 9 and 18 billion, covering car loans back to 2007. Did you get a car loan in the last 18 years? You could be in for a bit of money if it's from Black Horse.
Have you read the RNS this morning from them?
No.
Okay, so it did say after initial assessment and pending resolution of outstanding uncertainties, it believes that if there's any change to the provision, it is unlikely to be material in the context of the group. And then it said, stating half-year results, it continues to perform in line with guidance. So it seemed like a relatively calm assessment. I think for the motor industry, this is probably a much better result than they had feared, I think, because it's certainly if you're expecting 10 grand in payouts and you're going to get 950 quid, you're going to be unhappy, particularly. But for the companies.
For me, and what Jeffrey said on Saturday as well, it removes the tail risk.
Yeah.
It has de-risked Lloyd's, which has been dying to break out, in my humble opinion, because I am definitely not a chartist. And let's have a look at the daily chart there. For me, this is a stock that's wanted to break out for months, and the thing stopping me owning it has been
what happens with the car finance stuff.
Yeah. And that is now gone. So I am in the opening auction to buy these things with a top, of course, because I learned my lesson in legal in general. Is it legals?
I think so. It was, wasn't it?
Yeah,
No.
to go in at market. So I would say if you never go in at market in an opening auction, you will never be disappointed. Because I paid £2.60, I think, for them, and they were 2.48 bid within 3 hours. 7:58. So what do you want to do, producer Bill? Let's go through this morning. We'll do a guess the chart at 8:10, people. Morning opening moves. What do you think they are? We've got BP unchanged. Andrew McKelvey telling us about the big discovery there. IAG unchanged, raised to equal weight at Barclays, of course, after those great results on Friday. Lloyd's up 2%. Who's making these? They're up more than 2.
Well, caution.
Who's it? Singers. I will have 200,000 shares there, please. LSE commencement of a 1 billion share buyback, and Shell cut to hold at HSBC. Right, let's go into our opening bell in 1 minute. Right. Go on, Chris. Take us through what else you're going to watch, because I've got my cup of tea to have.
Oh,
I
there's
haven't touched it yet.
a couple of other Close Brothers as well coming up this morning as well on the news. The Motor Finance and S&U was the other one. So those are probably the key ones to watch. Watch, of course, the farmers in the UK as well. If you've got Swiss ones under pressure, then the UK ones, GSK and Astra, could be key to watch for, I think, as well.
Oh, do you think?
Maybe just out of sort of sympathy, maybe.
They got spanked on Friday, yeah. And yes, we did notice the comment asking for more peers. God, you're a glutton for punishment. And yeah, Bill Blaine, absolutely fantastic. And Joe as well, Joe Clement. And last week, of course, Tom Price calling the 20% drop in copper 6 hours before it happened. Bell in your hand, please, Mr. Organ player. Terence, you like that, didn't you, Terence? Right, where are we? We're off and running for the London Stock Exchange on August the 4th. It's Monday. And we should be excited because Trainline is up 4.7%, not the one I was expecting to see at the top.
Choo-choo.
WH Smith up 2 point... No, I think these are just some wide prices. Barclays up 1.3. Small recovery there. Barclays have car loans? Probably do, don't they?
Maybe have a little bit of exposure. But
Yeah. The Pru up 1% and BP up 1.3. BP didn't get hit that hard on Friday, did it?
No, I don't think so. What have we got?
Canal Plus down. We've got Bars Iron Brew weaker, losing its fizz this morning.
No, stop it.
WPB down a little bit, and Bats. You can tell it's a quiet weekend for me, can't you?
Well, watching the cricket.
And yeah, Halford's got a little bit boring at the top of the. Nothing exciting there, is there? BAE Systems trying to have a bit of a recovery.
Yeah.
As is Antofagasta, of course. There was that horrific move in copper hurting it last week. Glencore back above £3. Good to see.
Not much.
For the old ISA.
Not much doing. I mean, there weren't that many RNSs, as we said this morning, so it's quite thin news, I think. Fresnillo one to watch this week, of course, because it reports this week, and it's the best FTSE 100 gainer so far this year. So that's an interesting one. It's a slightly quieter week.
Now, Watches of Switzerland was down 7% on the back of the Swiss news. Let's have a look at how this thing's been trading, because, of course, there was bid rumours about 18 months ago, 2 years ago, because I had a little play on that, and then wish I hadn't. And then, yeah, you can see it there. It got absolutely murdered on Friday morning.
Absolutely what?
Murder. There's been another murder. Watches of Switzerland. Is it because it's got Switzerland in the name?
I think it's got Switzerland in the name. This is how markets tend to work, isn't it, really?
But what an opportunity to buy those at £3.20, now £3.30.
I don't know anything about them coming apart from the name. They often crop up on the morning call movers, risers and fallers, which I tend to think is a very bad sign for most companies if they're always either in the top rise or top fallers on the 350. But
right, Lloyd's still in auction, so Singer's 2% we know is already wrong.
Swiss index holding up this morning so far, 11,613. So if there is a wave of selling coming, it hasn't materialised yet. It feels like a wait and see moment, really.
Right, Air France and Lufthansa, so the airline's strong. That's why WH Smith is up this morning. And we've got, Metal Water. That is up 60 basis points ahead of numbers on Friday.
Meta what? Meta Water?
The river of metal.
Oh.
Rheinmetall.
Oh, Rheinmetall. Sorry, with you now.
That is up 80 basis points. That's come off the highs as well, really, hasn't it? But it is time to have a look at Richemont. There is, down 2.4%. In Switzerland, actually much better than expected.
Yeah, what's the chart look like on that? Is it recovering off? There's a bit of a gap, but anyway.
Let's go to 3-hour chart there. Oof, yeah.
Oh, niche.
Go back down to April levels.
Yes,
really.
well, the Swiss index itself has been a very poor performer over the last. It's just not kept pace with everybody else. It's a bit more trading more like the CAC really than anything else. But the swatches, yeah.
Swatch down 3.6, better than expected though. Pre-market it was down 5. So right, let's have a look at Lloyd's. I'm obviously hoping for a lowish auction because I'm in to buy them. I don't want them to be. What does that? I put an 81 pence limit on. I don't think they should be as high as 81 pence. So I ideally don't want to be paying that. But I do think they should be. Who am I kidding? I do think they're going to 80.
Yeah, I mean, that's a very strong chart. That's a very good performance off the 2024 lows. It doubled in value just over 18 months.
If they open less than 79, I am going to buy more. So let's just get ready for this because we are. How many seconds past the 4th minute of the 8th hour are we? Come on. What is Lloyd's? What do you think Lloyd's are going to be opening at, people?
Well, this definitely wasn't the open we thought we'd get at about 2 o'clock on Friday afternoon, was it, really? really thought it would be a continuation.
Overall.
Yeah.
Yeah, and well, yeah, I've got to work out what my hedge will be if I open a decent Lloyd's position. American banks. Ooh.
Yeah.
Lloyd's. Is it still not opening?
Oh, there we go.
Ah, damn it.
Ah, that's right.
Paid the bloody top. That's why you put a limit in. At least my limit at 81 pence stopped me paying 82 pence.
Oh dear. Deary me.
Right, 70. I will buy more at 79 though.
Up 5.6%. Wow, that market loves that.
Right, so that's me bought 25,000 at 70. Looks like 77. 70. Let's see. But I have bought another 15,000 at 79.89, I think it was. So we're going to watch that one. How are close brothers Chris Beecham?
Oh, that's one of them.
Up 27%.
Because this one is really motor finance. It's almost nothing else, is it? So
it was down 25%.
Yeah. So there's your leveraged.
So if you're a close brother, then I think the Supreme Court is another close brother of yours.
Yes.
Your friend this morning. However, it has oh no, when did this first come out? It must have been. It's exactly at the level when this first came out. £5. That was the 25% drop.
Of course, it was trading at £16 back in 2021. So that's been a lot of value destroyed there. But is that sort of a low there? I mean, if you're looking at levels, the high from August, September last year was £5.70. So that's where to watch if and when it gets there in the weeks to come.
Right, is Lloyd's going to manage to break out then? I'm going to put a few orders in to buy 15,000 at 79.5 on the buy side, and then 15,000 at 79 the level. Order by 79. Good kill, cancel. So I need to find a hedge. What is my hedge, Chris Beecham? Is it Barclays? Barclays is a potential hedge. Let's see. Since the start of 2024, Lloyd's is up from 47p to 80. So what's that? 85%? 47p to 80p?
It's in that kind of
33% gain. No, not quite. 75-ish percent. What is Barclays since the start of 2024? I'm not saying that the earnings have gone up the same, but just as a comparison website, we are £1.50 to £3.60. So Barclays up 125%, 130%. So Barclays up 130%, Lloyd's up 75% since the start of 2024. I think this has been what has been holding Lloyd's back, and I think 85 pence is in the sights potentially.
Yeah.
Still, I mean, it's still it's still going to be £1 billion hit, but they had provisioned 1.2.
Yeah.
And it's not going to be a 2 billion hit. That's
exactly. This is again. It could have been a lot worse. This is the market reading the positives into it, as ever.
Okay, I'm going to be responsible. I'm going to put on a little bit of Barclays as a hedge. How much am I in for? 15,000. So I'll put half Barclays hedge on, which is what, 5,000 shares, not 4,000 shares. 4,000 Barclays. I'm selling at 362.65 as a hedge against Lloyd's. There we go. 362.50. Where's the stop? Was ist sein Stop? Where's the stop?
So your school of language lessons really coming in handy there.
That's it. Wo ist? Jogger, help me out.
I was Spanish, not German, so you have to.
Go on then. What's Spanish for where is?
Donde está stop?
Donde está?
We have to do the accent as well.
Maturin will help us. Finito?
No, that's more Italian and finished, isn't it? So.
All right, so let's go back to the big moves then. Where are you making money this morning, people? You are making money. If you are
Oh, spoons.
Long a bit of spoons.
Gosh, they had a good update last week, didn't they? I think a very, very good set of numbers from them. Gosh.
Yeah, they had an extended auction, and now 5.5%.
Wow.
Must have been a good upgrade.
I didn't see.
We've been talking about it. My taxi driver told me to buy these, and that was a reverse.
It is
He
true.
says, I get a pint in there for £4.50. Where else do you get a bloody pint for £4.50 in Chelsea, mate?
He's not wrong, and the selection's often really good, actually, in terms of real ales, I have to say.
Don't tell me you go into Wetherspoons.
I do sometimes, because you get a better selection than you do the nicer pub next, the more classy pub next door. It's always London Pride, whereas in Spoons you will get more interesting beers.
Terence has made a great point as well. It's exactly where we went in Gatwick Airport for our pre-Ibiza. Gatwick Airport, you're going to go to Wetherspoons.
Of course.
Yep. So, yeah, good point.
I wouldn't, but that's enough.
I want to buy more Lloyds. No need to build a position in the first 4 minutes, Rich.
Scale in, but not quite as quickly as
Yeah, exactly, yeah. T-what? No, was it DC? Yeah, dollar cost averaging.
Yes.
Buy them all.
Not on the minutes, though.
Right, it's time to go guess the chart. What country are we going to be in? It's a US stock, and producer Phil, let's go with his thought. He done me because Friday was one from my watch list. So I wonder
did you
if
get
it. No, I didn't.
That's just on your watch list.
My
It's
own
too
watch
long.
list. So let's go
Voiced
down
by our own
to.
petard.
If you are wanting to avoid the stocks that I'm interested in, there we go. On the watch list, Rich McDonald's wants to watch.
Should we get that added to the platform?
So that is the platform.
On your platform, though. I meant generally.
Yeah.
Should get an official.
Oh yeah. Wants to avoid.
Everyone's platform. Yeah.
Well, no, we did have a think on Friday. There should be longs and shorts because I can't put any shorts in there. So these are just long-term long ideas.
Right.
Right. What is producer? Oh, has he gone Occidental? Maybe. Let's have a little look. Like and subscribe. More here's more Bill Blaine and more Claude Beecham. Martin laughing at the thought of Claude Beecham in a Spoons.
Yeah, but the beer's good, so that's where you go.
Is it after you come out of playing the organ?
Sometimes, yeah. Post Evensong pint. Yes.
Right, you ready? Where's Hamish? Hamish, give us a thumbs up if you're ready. 3, 2, 1, let's go. Right, welcome to Fast Markets. They still haven't told me. I haven't looked at the chat, and it's frustrating me because it was trading at $8, and then it's gone up to $14.50, almost 15.
And it's come off again.
I see it at the top now. Riot blockchain. I wouldn't have guessed that. I don't care. I'm not playing. I'm taking my ball and I'm going home. I would not have got Riot blockchain.
Father, when the test match goes badly, I said, ask him, are you watching it? He goes, no, I can't be bothered.
Yeah. Funky Gibbon, well done. Funky Gibbon is trading Riot blockchain.
It's just showed everything. Is that how this works? It just maybe they spend their weekend memorizing charts in case.
I think, yeah, Hamish and Funky Gibbon must be chartists, technical traders.
Yes.
Right, Judas Boyce should be called the watch out list. Rich McDonald's watch out list.
Why is Vodafone on your watch list? Surely it's already in your portfolio, so it shouldn't be on your watch list.
Yeah, but I don't think we could load up on these.
But you've already got it, so it should just be in your list of stuff I have, shouldn't you?
Yeah, but that's what I mean. We couldn't. Some of those may or may not be in my ISA already.
Widows and orphans stocks, that kind of thing.
All of them. Right, Lloyd's 80.5, still not as high as where I bought it in the opening auction. Brilliant. But we managed to get some cheap ones as the sellers came out. But what are we here for? It's not to talk about current stocks. It's to talk about what is coming up this week. And our good friend Claude here that writes this wonderful piece, The Week Ahead, is going to take us through. Where are you going to make money this week?
What have we got this week? I mean, it is Bank of England rate cuts expected on Thursday.
Is it 50-50? Is it 60-40?
No, I think it's now pricing is leaning very heavily towards a cut. So
thanks to the
latest
jobs numbers being lied about in the US.
Well, thanks to the latest numbers in the UK, yeah, they weren't great either, were they? So, but it is a UK heavy week of earnings, isn't it? Particularly if you scroll down.
Oof. Right, let's scroll down on this. Plenty UK names to report, including Fresnillo, top performer of the FTSE 100 this year. I would not have had that on my bingo card.
Yeah, there you go.
And then Lloyd's, right? So there we got nothing on. That's more your economic reports, isn't it?
So yes. Let's do economic. Let's do company numbers first. So you've got obviously the slightly less heavyweight stuff in the US this week, with all due respect to Palantir and stuff, although they're the key one to watch perhaps today because it's so expensive. But you've got Fresnel, Intercontinental tomorrow. That could be interesting given obviously as an international company, it's got a very big swathe of rooms in Asia. So interesting one to watch there. And a very strong long-term performer that's taken a bit of a hit so far this year. AMD, of course, in the US. McDonald's, but you've got Glencore on Wednesday, Hikma, what else? We've got Legal & General, so everyone's favourite dividend payer, coming up on Wednesday. There we go. And then Eli Lilly and Gilead in the US on Thursday.
I think you're underplaying it somewhat. I think it's a very exciting week because none of these Magnificent Seven, boring. We've got
this is more of the actual economy, isn't it? Really,
exactly. Yeah, the trio on Wednesday really excites me. McDonald's, Walt Disney, and Airbnb. That is the American consumer. That is the global consumer, especially if they're fat and love Mickey Mouse.
Towards late, yes, turns towards exactly. And Caterpillar, of course, another one of those sort of bellwether stocks. Americans building, are they not building, that kind of thing. Another one to keep an eye on, and Pfizer. Yeah, I think it's not quite.
These are real stocks to trade rather than the
always go up stuff. Well, Palantir is a nod back to that, isn't it? Really?
Well, it's a big evening for me because I am. If we want to take a quick look at the portfolio, actually, I've actually made quite a big change. One that I would not have thought that I would be seeing myself in the position on Thursday, but I have
dramatic music from the gallery, please.
I've bought a lot of Apple. Now, as the market was selling off on Friday, I had bought some in the morning already because, as we know, I am very, very, very short S&P 500 through the short call positions. So let's just have a look at those and remind ourselves. I am short the... I've got, there's too many positions now. That's always a warning sign.
Getting a bit busy on that list.
It is, isn't it? Right, so we've got short the 6400s, the 6600s, 64, 65, 66, 68, and 7,000 calls. That adds up to a lot of calls.
Does anybody notice the pattern developing here?
That I am short the S&P. So, of course, I've lost quite a bit on those as they've been marked up. I'm also short names like Palantir. I'm short 80 of those stock, but I am short 300 shares worth of the 185 calls. Nvidia, I'm short 200 of the 200s and 200 of the 180 calls. So all in all, very short the big momentum junkie names that everybody who has never done a day's work on valuation in their life likes to buy. And
There speaks a sour person about that.
but however, Apple has now reported numbers. They were good enough, remembering the stock is down 15%?
It's down 19.2% so far this year, which is the worst of the Mag 7 after Tesla. It's down 25%.
So I've taken a little bit of a hedge in Apple here. I do not like Tim Cook. I don't like what he has failed to do. But I've now bought 300. However, it is, of course, I couldn't let myself just take the loss because my average is 209.5. So I've sold a lot of the 210 calls for August. So 600 calls I am short, which is 6 times 176, about $1,000.
Yeah, about 1,020, isn't it? So yeah.
So worst case scenario, I'll take in $1,200 from being short the calls, but I am thinking that we'll get some kind of bounce in Apple up to about a 205, 206 kind of thing.
It's interesting with Apple, isn't it? Because it gets counted out so many times and then it does eventually go on and just rallies again. So you have to, I think a lot of the sentiment around Apple is, as you would say, Tim Cook has lost the plot. They don't know what they're doing. They are being left behind.
In AI especially.
Yeah, they are out of the game. And I think that it's always unwise to count them out, really. And at 30 times earnings, are they now a value trade in the Mag 7? Who knows?
True. Right, I've also pre-positioned myself for some Lloyds. I've short the US financials because remember, financials do not like rates going lower. So I have shorted a bit of those following the jobs numbers on Friday. And then, we're in the money on Lloyds. Brilliant. Lloyds is now 80.66 against my average in price of 80.4. So we've made a nice little £87 on that. And but finishing off, sorry, I'm scared tonight of Palantir. And therefore, I should probably close this short stock position and just run the short calls.
It might be more sensible given the way it's moving.
It's been bulletproof, and it was bulletproof on Friday, which worries me. If Nancy Pelosi is buying these, then
get out too soon.
Look
at that move. Look at that move. It's just bonkers.
And you get a retrace like you did on Thursday and Friday. You'd expect this thing to be a 149, 147. Yeah. So the market is telling me, McDonald, you idiot, don't be short these. So So I think what I'll do is I'll cover the stock position. I'll run the short calls, and then when they're up 5% later, I'll knock it back out.
That would work.
Yeah. I think I'll do that.
Tune in tomorrow and see how it went.
Yes.
But yes, you get a sense there's probably quite a lot of, shall we say, weak hands in this that aren't going to be very happy if it starts to have a sell-off, and then it could snowball very quickly, I think.
Yeah.
Palantir.
I'll give you an example, and this, we got a good friend in that does the content creating, right? Like we've had some of the people on, and Tom knows what he's talking about. He knows his investment, and his investment thesis is buy and keep buying, right? S&P 500 always goes up over time. Buy and keep buying. Don't even think about moving into anything else like the FTSE or Japan or India. You just buy the S&P 500 and you keep buying, right? Who's been right? Him. He went out with a video on Friday, which for me is asking the market to slap you in the face. He said, I've just made 4 times my monthly salary in a month on stocks from being long Palantir, long Nvidia. Yours. That is the red flag to me. When people are going out making 4 times their monthly salary in long Palantir and Nvidia, when they have no idea about stock valuation, you got it coming to you.
I mean, I don't know whether they can get my screen up, but this is the Google Finance screen for the PE ratio. Can we zoom in on that? Probably not, because I can't do zooming on my thing. Here we go. 673 PE. That's not a typo.
Yeah, so it must be 67.3, surely, Chris.
They moved the decimal point. 673 times earnings.
But let's be fair. Let's look at the earnings expectations for like 2 years' time.
Okay, well then I need to
if we're actually being genuine on this,
level up on this,
because I am guessing it must be like 80 times in 2 years.
Forecast multiples.
All right, if it's 80 times in 2 years, I'll close my short. If it's above 150 times, I am staying short.
Forecast PE. So where are we?
So full year 27.
154.
I've got to stay short that. 2 years out.
154.
And it's calendar year as well. So that's December 27. It's 150 times expected earnings.
That's crazy. But it's momentum. And I mean, if you look at, let's see what the earnings have done over the last, what's the income statement look like on Palantir?
And the revenue growth is only 40%.
It feels like it's come a very long way in a very short space of time.
Now, that's the kind of thing that makes me want to sell more calls and sell calls all day long. Because, you know, the stock's trading 154 and I can make 7% from selling $200 calls.
So it's making $30 million in June of 2023, 80 million, 106, 110, 140. So, okay, so there's a nasty drop there. But 223 in March.
Okay, so it's
the earnings, the income before taxes is going in the right direction. So that's
right. Let's talk about our good friend Figma, because
yes.
I don't know if you've got notifications switched on or switched off on your phone, but on Friday afternoon, I was sitting there clearly feeling relatively, you know, happy to take risk because the S&P was falling through the floor. So CRM, which you've seen Aisha Anderson on here before, sent out a text message to everybody's phone saying Figma is available for trading on the IG platform. Stock up 250% from IPO. So I tried to short it. And it said, you know, borrow not available kind of thing. And I was, why am I getting a notification if I can't short it? So I phoned up to have a moan. And they went, no, you can short it. How many do you want to short? So it was like, you put your money where your mouth is, McDonald. So I did. So I shorted 25 shares.
Right.
When something's moving 100%. So that's about $3,000 worth. And that was at 137. Managed to get short. And
dropped like a stone.
Within half an hour, it was at 125. You know, the ability to do that, because of course IG is long positions from clients, or IG clients have long positions, meant that you could short it.
Yep, exactly.
Which was wonderful. So, of course, small size and its availability, but it is always worth that phone call to the desk. Even being short 25 shares made me $250.
Yeah.
Which, yeah, paid the piper, as you say.
Yeah,
so yeah, that's
mad,
Figma.
right?
But let's have a chat about what exactly has happened in this stock, Chris Beecham.
Well, look at that move. I mean,
That doesn't even tell.
it's the half of it, does it
Yeah.
really? That is to go 250. That kind of it says two things. One, that there was a massive demand for it, but it does say, well, surely they should have priced this better.
Mm-hmm.
Surely there was an underappreciation there. Okay, you always want an IPO pop. Fair enough, it happens. But this is the kind of thing you read about in Chinese IPO markets.
Yeah. I remember we used to do Chinese IPOs for 100%, and we were begging the broker to give us allocation up 100%, up 250. When's a stock got up 250%? And of course, it was the bank's underwriting, wasn't it? Mm. It wasn't as if the company has benefited from this. The company has basically sold these shares to the banks for $33, and the banks have sold it to the market for 80-ish, 84.
So Adobe nearly bought it for 20 billion in 2022. There you go.
And what's the market cap now?
Pass. $115 a share. Don't know. Oh, Google Finance.
Should be in here somewhere.
This is good.
68 billion.
Okay, there you go.
Good. Right, that is how logical the US market and the retail traders are being at the moment.
Last check-in on the indices, see how we're doing this morning. Where's the FTSE?
Market rip-roaring up 55 basis points, with the relief being...
See, FTSE 100 doing poorly this morning. Everything else happily rallying away. FTSE 100 just...
But it's hugely outperformed on Friday.
Yeah, exactly. So
yeah, the huge sigh of relief in the market from... Sorry, why is there relief this morning?
Well, I was reading this good piece from, what's his name, Rob Armstrong in the FT about the jobs report, obviously. And again, this is the funny thing about Trump having a go at the BLS, because most of the revision is because of the loss of government workers. Yep. So if you hadn't had that, things don't look great, but they don't look bad either. They look at the private sector isn't hiring. So yes, it is the government jobs. You wanted to fire government workers. Well, lo and behold, sunshine, here's your jobs report. But it isn't, as this pointing out, it's not as bad as it could have been. It's no real change to the overall story, which, okay, isn't showing a roaring economy, but nor is it recessionary. So it's kind of, everyone's gone away for the weekend. People have read the numbers. The dust has settled. It's not...
Buy.
Oh, come off it. I mean...
Right.
Gotta see where it goes.
Garth McKenzie time. We will let Claude go back to his desk and do his proper job. What's on the cards today?
Well, I've got some Bank of England previews to write and that kind of stuff, but also trying to watch the cricket on the sly. That's going to be fun.
Well, we do. We spend a lot of money sponsoring the team, so...
Yes, we keep an eye on it. We could get an hour's play and it could all be over, so you never know.
Great. Right, Garth McKenzie up next season. If you're looking for flexible ways to trade financial markets, whether you're experienced or new to trading, you've come to the right place. CFDs let you speculate on the price of financial instruments like shares, indices, forex, and commodities without actually owning them. You can benefit from both rising and falling prices across 17,000 markets, letting you find the perfect opportunity. So if you think the market's going up, you buy. If you think it's going to go down, you sell. When trading CFDs, you're trading on leverage. Now, leverage lets you trade bigger positions with less money up front. So this increases your profits on your trades, but also remember your losses are also amplified. So be sure to manage your risk. With us, you're not alone. You're part of a wide community of traders that you can learn from. We've got the experts, the tools, and extensive educational resources to help you on your journey. If you're not quite ready to trade CFDs with real money, you can always give it a go on a demo account. Open an account today, Join the conversation and be inspired to make moves.
Bring me the next shiny new thing. Bring me the next shiny new thing.
Welcome back to our Expert Edge section with Garth McKenzie, of course, of Traders Corner. How you doing, Garth?
Hello, Rich. It's good. I'm good. Very, very good to be back with you. How are you doing?
Yes, very happy. For a Monday morning, there's lots going on. Lloyd's going through the roof. We were just talking about there. And then, yeah, how's the book doing? What's your view at the moment?
Yeah, it's interesting. I mean, we've started August with a crack to the downside, right? And obviously that came in with tariffs on Friday, and then of course that employment data on Friday as well in the US was weaker than expected. So we've kind of gone from this market that just seemingly goes up and up and up without stopping. That action that we saw into the end of last week, particularly Thursday and Friday. Thursday we had quite a big bearish engulfing candle on the S&P 500, and then Friday we gapped sharply to the downside. So it's like all of a sudden we're in August. August is a seasonally weaker month usually for the market. This sort of August to September period is seasonally a bit weak, and we've come in with a crack to the downside. So you kind of think, well, okay, so far it's doing all the right things from a seasonal perspective. And you can make all the arguments about, high valuations and tariff impacts now and what that's going to be doing to profit margins and who's going to pay the tariffs. Is it going to be the end consumer? Is it going to be the corporates? But all of these things kind of combine, right, at this point in time, at what is a seasonally weak time of the year anyway for the markets. And technically, it sort of confirms that we probably do have a bit of a bumpy time ahead of us, because I think it's going to take some doing to undo that technical damage that happened into the end of last week on the major indices. Those gaps to the downside were quite substantial.
Right.
And
a lot of pain.
And yeah, well, there was some pain, but it also, it probably was to be expected as well. These markets have had a hell of a big run off the April lows. And we had gone, I think it was 26 days in a row without a 1% movement either up or down for the S&P 500. Those spells don't last forever. And inevitably the market was likely to pause at some stage, and maybe that's where we are now.
Yeah, and as traders, that kind of stifles us a little bit, doesn't it? These 0.3% moves every day, it doesn't give us the opportunities to find where the machines are wrong. The machine's pushing things to the extreme, or overcorrecting, maybe a long fund trying to dump a position that it kind of felt like in Apple on Friday. That's one of the reasons I continued to buy them as they came off, was it felt like a Buffett was just unleashing or a long fund, because it's not often you have a stock with better than expected numbers, but you see the stock get crushed. So a bit more volatility in the market. It's a trader's friend, isn't it?
Well, it is. You do want a little bit more volatility. I mean, personally, I like some volatility. I don't like too much volatility, because obviously that can also take your head off. But these small moves, as you say, 0.3%, 0.2%, these tiny little trading ranges that we had been seeing in the last few weeks on the S&P do make it a bit tricky. But to your point about the earnings reactions to some of those magnificent 7 stocks that came out last week, it was very interesting to see the reactions, because as you said, both Apple and in fact Amazon as well were both down on the back of their earnings. Amazon also got punished quite badly, I thought, for what we, not bad numbers.
Right.
But then you go back 2 nights before that, or 1 night before that, and look at the way Meta responded and look at the way Microsoft responded. They both gapped massively to the upside, but then you saw those gaps being faded quite sharply immediately. So it was also kind of around the narrative of the broader market on the day, wasn't it? We had a strong market the day after Meta and Microsoft reported, and market responded favorably. We had a weak market the day after Apple and Amazon reported, and they responded poorly.
But do you not think that was so Meta and Microsoft opened up on the highs, and then somebody somewhere said, right, this is as good as it gets. I'm out.
Yeah, quite possibly. Are you able to share my screen? Because if we do that, I mean, I've got, I had a...
Good stuff. Let's get that up.
See that. If you can see that, all right. I'm going to try and maximize it, although it seems like the maximized is coming up on a different window. Let's just work with this. I'll make it as big as I can, right, in this thing. But let's just quickly talk about them, because we start with, let's talk about the ones we were discussing a moment ago now. So Meta, first of all, as we said, gapped massively to the upside, but it faded that gap quite quickly soon afterwards. And like you said, it's almost like, right, this is as good as it gets. That felt very exhaustive in terms of the way it's shot up 10% after hours. And then it very quickly attracted selling. So now we've got that big gap, but that to me does look a little bit like an exhaustion gap in the near term.
Wow. And
it won't surprise me at all if we see the price drifting back into that gap. And yeah, there's a lot of support around about $720 now for Meta, where that gap comes in, or even down at 700, there's support. But it does kind of feel, to your point, that we've now seen, as good as it gets for the time being, and it's made this exhaustion gap to the upside, and now it's time to just settle down a little bit.
So for me, that's the perfect situation on Tasty for a strangle. Selling a 730 put and an 800 call, you're dancing.
Yeah, I mean, you could look. I'd be wary of being naked that put going into this time of the year.
Okay.
I would say, would you not? I don't know. I mean, would you not do
an iron condor?
If you're bullish, maybe you sell the put, but you buy a out the money put to sort of lower down put, and you collect the premium. I don't know. I mean,
good idea. So maybe do a 730, 690 put spread, but selling the call naked.
Yeah, that to me would seem a slightly safer trade, because you don't have the downside risk in that case, just in case we do see a deeper pullback in this weaker time through August now.
Nice. Great. Okay, that's Meta.
Microsoft was the other one we spoke about, which also had a similarly strong reaction. So a huge gap up on the back of earnings on Thursday night, but almost immediately started selling off after the market opened, up at sort of close to $555 a share was where it opened, and it just drifted lower from there and continued lower into Friday's session. So once again, it looks like an exhaustive move to the upside, and it's now giving it all back and probably coming back into that gap. And that gap, that earnings gap, may very well offer some support, but certainly it was a really nice opportunity to get out of a long if you had been long into earnings.
That's it, right? And this is where, as a bear, you've got to be so stubborn, because Palantir, we're going to see exactly the same thing tonight, right? Look at that move from the last set of numbers in May, right? What do we go from 400 up to 525 going into it? And surprise, surprise, they came out with good numbers. The market's telling you they're going to come out with good numbers, right? Palantir numbers tonight are going to be fantastic. It doesn't mean they should go another 8% on the back of it.
Yeah. And that's the interesting thing about where we are right now, is that the markets come to expect good earnings. And look, having said that, the low earnings expectations had actually been dialed back a little bit heading into this earnings season. So they had set the bar a little bit lower. But what that means is that you really, really, really need to beat the bar in order to justify a big rally in the stock price. If you just meet the bar, you just meet expectations, it seems like the market's saying, well, thanks, that's nice, but it's not good enough. And they sell off the stock.
Yeah, there's no limbo dancing in this this place. You got to be Javier Sotomayor in this market. Yeah, well, that's right, exactly. And you so it says something about the kind of market we're in, right? That it is richly priced, it is full, and there's no room for disappointment, or even anything that's on target is not really good enough. It's a richly priced market, and we're in a seasonally weakish time of the year anyway. So yeah, I think when I was with you in the studio, we talked about dancing close to the door, and I think that's still valid now. You've got to be cautious this time of the year, and also just seeing the way a number of these stocks have been trading following their earnings reports. Just be careful. We got a question from our good friend Neil away from the numbers. What do you think of Reddit when it comes to these kind of situations where it? So let's have a look at Reddit. I mean, I'm going to come back onto my IG screen, or you've got it up there, Rich. So yeah, cracking numbers. They were cracking numbers, and I never like to blow my own trumpet, but I did put out some analysis last week to clients that follow my work, and said that little setup that we were seeing there looked like a cup and handle pattern. Oh, well done. It was kind of building for a potential breakout, and that actually, if you wanted to play that earnings move, if you believed it was going to break to the upside, the way I would have looked at it would be to buy a short-dated and at-the-money call, and that would have done very nicely for you on that breakout. So some of them work, some of them don't. But the thing about doing that and trading it that way is, if you buy a call option into a setup like that, and you buy a close-dated, near-dated one, so it's not a lot of time value left, you can then you can see those calls gain in 3, 4, 5x on a move like that we saw in Reddit. And know that your downside is limited to the premium you pay, really. And that's a great call. Just take us through this term that you introduced, the cup and handle. I've tried to set it up for you there on the chart. Well, okay, so just zoom out a little bit on it, if you would. The cup and handle pattern, there we go. Just mainly because I want to see that spike to the right-hand side. Yeah, sorry, I know. I was saying beforehand. So beforehand, right. So going into it, what were you looking at? Okay, so if you look at it in terms of you've got that on the left-hand side, you had like a big rounding bottom type of pattern. Now that is what we refer to as the cup. But if you just go a little bit further out, Rich, I'm looking at it from a bigger picture perspective than what you are. I got you. Right, there we go. So I'm looking at it. If you go all the way back to March, you see that rounding back bottom pattern there. Right, so you've got that huge, nice, big rounding pattern. And then you come up to the peak in early July, and then it does another little dip into July. So that big rounding bottom that I'm talking about since March, from March until July, that's kind of the cut part of the pattern. And then on the right-hand side through July, where you've got that little shallow dip, that's the handle. It's easier if I could draw a picture. So the handle's on the right-hand side. Yes, on the right-hand side. Correct. That's where I've always gone wrong. I've always looked for the handle on the left, and then. Are you left-handed, Rich? No, it's unfair. I'm ambidextrous. I'm bad with both. Okay, so that set you up beautifully to notice that was the chance, and then you see the huge breakup. And just in terms of that, means that the demand's there because it's been trading a low range, but the seller's there as well. And any good news is going to wipe the seller out, and you've got, hey presto.
Well, that's it. And particularly that action through July, what you saw there was that every time the price dipped a little bit lower, it was met with buying interest at the lower levels on each daily candle. You've got on the daily candles there, you've got long wicks to the downside, which indicate that the price trades lower intraday, but it doesn't stay down there during the day. It trades back up into the close. So what that is telling you is that there's buying action at the lower levels. There's accumulation happening at the lower levels. And when you get that type of trading action, it's worthwhile to pay attention to it, because it does kind of indicate that there is underlying strength there. There is buying happening under the surface. And when you get a catalyst like we did with earnings there for Reddit, that can be the thing that sets it up for a break higher, which in this case, it did very, very spectacularly.
That's where I really buy into technical analysis, because that's exactly it. Every single time this stock went lower on the day, there was a buyer there. And that makes a lot of sense from the psychological side.
Yeah, and that's what I like about technicals, is that it's a read of the dynamics between buyers and sellers in the market. You're saying, well, what is the chart telling me? It's telling me where the buyers are. It's telling me where the sellers are. It's telling me where the levels are, where this price might break support or where it might break through resistance. And all of those things, to me, as a trader, I find technicals incredibly useful. And I'd say that 80% of my decision-making is based on technicals. Obviously, keep abreast of the fundamentals and know what's going on. But I find trading off of a technical view far more useful than trying to trade a fundamental view.
Well, definitely, and the market's given up on fundamentals a long time ago, until days like Friday. And days like Friday, suddenly you get 6 hours of the way that markets were designed to be, with logic coming back into it. What else have you got for us on the screen there?
Well, I mean, if I continue to share those slides, we've had a look at Microsoft and we had a look at Meta. Let's have a look at the other two, which had a negative reaction to their earnings. So Amazon, different story, right? This was setting up it was trading quite a bit higher, and then you got that big gap to the downside on Friday after earnings on Thursday night before that. That gap now, again, I think that is quite significant technical damage that we've got there on the chart of Amazon. You may find that the price pops up a little bit at some point, but I think that you're going to find that a lot of resistance comes into this gap if it does perk up a little bit. And it's not to say that I'm turning bearish. It's just to say that I think that bullish move that we'd seen from April through to the end of July, where it was just going up in one direction, that technical action, that trading action has now been completely knocked off kilter. And it suggests to me that we've probably got some corrective period coming ahead of us here. It might be a bit choppy. It might trade a little lower and maybe go and flush the 200-day moving average down there, which is at about $209. But I just think that bullish action that we had seen in Amazon leading up into earnings is now the thing of the past for the foreseeable future here.
Okay, so again, that's giving me the confidence to sell $230 calls.
That I would say is probably fair, because you've had the bullish, or not bullish because it wasn't bullish, right? But you had the catalyst that could have been bullish for the market, for the stock, and that catalyst is now out of the way. So the likelihood of it going all the way back up there in a hurry, to me, seems fairly remote.
But again, a lot of smart people saying, "Oh, it looks a little bit overdone." It's been cuffed, and then it's had the negative impact of the market coming off as well. So it's got a double whack. So I'm looking 210. I'm looking like bit of compensation.
Well, 210. There's quite strong support there. That's where the 200-day moving average comes in. So there is a bit of support down there. So you may well find that the buyers step in around about that sort of area and maybe take it up a little bit. But you probably, my best guess at this point is that it would probably track a range now, with 210 being an area of support, up to as much as 230 maybe being an area of resistance, where the gap is. And then and to see the price chopping around in that sideways sort of range in the foreseeable future wouldn't really surprise me. And again, particularly because seasonally we're in this kind of bumpy, quiet northern hemisphere summer time of year for the market, broadly speaking.
See, these are nice trades. I'm just looking, if we can just switch quickly to the Tasty platform. 46 days away, of course, the mighty Tom Sosnoff saying 45 days is your kind of ideal time to put a trade on. So we've got the September expiry, now 46 days. I can sell the 205 puts, so give myself a little bit more safety. I can take in $4 there, but selling the 230 calls, I tell you what, let's go out to 20 delta, $235 calls. Suddenly, in 45 days' time, I'm taking in nearly $7.
Yeah.
And that $7, what's that? Over 3%. It's quite a nice return, isn't it? For
it is.
Let's see. Yeah, my margin. It's not ideal, but it's not going to break the bank. 3,200 on the BPR, but I'm taking in $700, and all I'm doing is saying, right, I tell you what, I would buy Amazon at 205, or I'd short it at 235. So yeah, I quite like that one. I'm going to put that on this afternoon, Garth. Thank you for that.
Okay, good. Well, let's keep in touch and see how it goes.
What's our next one?
Well, the next one was just to look at Apple, because that one also had a negative reaction to earnings last week, and you can see there it's really been sideways in a range for the last 3 to 4 months, really, between $195 and $215. And in fact, on a relative basis, this is one of the Magnificent Seven stocks that really has actually underperformed the rest of them quite notably. This and funnily enough, the other one is Tesla, which is also underperformed. But Apple had a negative reaction to earnings the other night. It traded down on Friday, and you can see right now it's dipping underneath all of those moving averages. So we've got it now below the 50-day moving average, which is my medium-term moving average. It's been below the 200-day moving average already for quite some time. And it's now dipping underneath those shorter-term moving averages as well. So in my mind, I think this thing is likely to head down towards 195, where the bottom of that sideways range comes in.
Yeah.
And then we will see at that point whether the buyers step in to defend the stock or not. But yeah, on a relative basis, it's definitely the weakest of the Magnificent Seven stocks as far as I can tell. And we've had a negative catalyst now, negative in inverted commas, in the sense of earnings that kind of were a little, poorly received, let's say.
Well, that worries me. I mean, I'm assuming it's going to be up 1% today with the futures higher. What changes, we're going to find out in a minute as well. Do you mind staying with us for the US Open, Garth?
Yeah, sure. No worries.
Brilliant. So yeah, be another 5 minutes. Let's go to the US. Oh, session's open, and we'll continue to talk about Apple.
Cool. I'm just going to close. I don't know if you could hear that lawnmower in the background. I'm going to go and close all the windows. Oh, sorry. Oh.
No, that's brilliant.
Live TV. There we go.
Is that somebody cutting your grass for you?
I usually cut it myself, but not this time.
Have you seen the movie Magnificent Seven, Garth?
No, I haven't.
Well, the big question is, who is going to be the Bernardo? Because Bernardo was the first of the cowboys to be killed. Who is going to be the most likely Tesla, I would imagine. But who is going to get knocked out of the Magnificent Seven? What will the next name be? There's Palantir opening up 1.8%, not letting me get out of my short position there. AMD as well up in my face, 1.5. We got Uber shortly up. Amazon, I wanted to see Apple somewhere on that list. It's not going to give me it, is it? Where is Apple opening?
There it is.
0.5%.
0.5%.
Dismal. Absolutely dismal. That is worrying me straight away.
So that shows you as well, then, Rich, there's relative weakness there as well. When you've got the others all up 1%, that one's only up 0.5%.
Yeah.
Just shows you there's relative weakness there.
Exactly. Let's continue down Alphabet again. Relative weakness there. Berkshire Hathaway. Keep an eye on that one because, of course, we had the markdown in their Kraft Heinz stake at the weekend.
Yeah.
So that one.
That's interesting. That Berkshire's interesting for me. It's something I've been watching because since Warren Buffett announced his retirement, which was on the 3rd of May, the stock is down about 12% since then.
Is it really? Wow.
Yeah, and if you actually look at the underlying holdings in the portfolio, they're not down nearly as much as that. And I mean, obviously, he's the Oracle of Omaha and he's the legend. But I find it a little bit strange that the share price is so weak. He's left a good team behind. They've got a very good pedigree. Does it warrant the stock being knocked down as much as it has been since he announced his retirement, which you can see was right at the top on your chart there?
Yeah, and that is a clear seller in the market every day, isn't it?
Yeah. So I think that it potentially lines up an opportunity to accumulate this stock with a medium-term view. It's not one to trade actively, I don't think, because it doesn't move that much. It's not that volatile on a shorter-term basis, really. But
yeah.
But I've actually started to accumulate the stock into weakness here with a longer, in the long-term investment portfolio, on the basis that I think it's this weakness is probably not really justified.
I've never traded it actually because we were always scared to, because of course when I was working at the hedge fund, it was before it had done the share split. So you could buy 10 shares and that was like $4.5 million worth. So you always, we'd be buying 10,000 of Renault or whatever it was. Whereas you buy, 10 shares of Berkshire Hathaway. If you accidentally buy 1,000 shares, you're getting a call from the risk manager. So sure. I've always stayed away from it, just scared. Right, there we go. Only stock down in the day, really, along with the 20-year Treasury bonds. So yields higher. Just a whole load of relief coming in from after Friday's move lower. Intel got hit quite hard. Intel got, again, it's been an underperformer. It had the numbers that weren't taken well, but it was hit again on Friday. So maybe we are seeing some opportunities in the market there.
Yeah, maybe. Intel just really, in terms of the semiconductor space, has just been very disappointing for a long time, hasn't it? You've got the likes of, AMD, NVIDIA. There's just a lot of these bigger other semiconductor players that are leading that space. Intel just doesn't seem to be in vogue at the moment, does it? No.
Okay, so Amazon up 1.2, Airbnb ahead in numbers. And nothing too surprising there. Let's have a look across at the tier 2 stocks, the more dangerous ones, I like to call them, Garth. And we're seeing strategy have a good bounce.
Yeah, it got sold down quite hard into Friday. In fact, I had been long and I got stopped out of it. And I think I was stopped out at 387 when it dropped on Friday. And I'd been in from about 400 odd. So, you know what? Sometimes you look at it and you say, well, I'm very glad I had that stop loss in place. And that was one of those days because I lost a little bit of money that was within risk limits and all that. So
exactly.
But you kind of, no one likes to take a loss, do they? Even if it is within your risk limits. And
helps to reduce your risk if you use it correctly.
That's some wise words from Axel Rudolph. Maybe we can hear them again, can we?
Helps to reduce your risk if you use it correctly.
There we go. I like that audio clip. But yeah, I mean, the thing about it is, when you execute your stop loss and then you see that your loss would have been significantly worse had your stop loss not executed, that's almost when you kind of want to like give yourself a little pat on the back and say, well done, that was good trading. You did the right thing.
Well done for doing your job.
Yeah, well done for doing your job, and know that not every trade is going to be a winner. I know statistically about 4 out of 10 of my trades, on average, 3 or 4 out of 10 are losers. I know that. So when you have a loser and it's within your risk limits, you just say, well, that's part of the business.
Yeah. Yeah, that's it. Well, I tell you what, that's the US all sessions open. I think we've pretty much covered. We've got a markup on the back of futures rising. Maybe the sell-off was too much, but we have been talking about Lloyd's this morning. Garth, would you mind taking a look at Lloyd's, because we don't have Axel Rudolph here, unfortunately, but as our stand-in technical expert, if you will, we've got Lloyd's now up 7.8%, 81.60. You can see here it's been trying to have that breakout for a while now.
Yeah.
What do we do here? What's that chart telling you?
Well, look, so we know the reason why it's up, right, is because there was that court ruling on Friday with the vehicle financing scandal, if you want to call it that, which seemed to rule favorably towards the banks. So you've got all of these banks that were exposed are all up quite nicely because the market was expecting a worse outcome. And I think a number of these banks had also started to make provisions for what they might have to pay up. And we come in this morning and suddenly realize, well, okay, it's not as bad as what was expected. Therefore, you get this huge, big move to the upside. Lloyd's is one of them. There's another one that I'm following, which you'll recall from your days in South Africa, Rich, which is FirstRand, because that has an exposure as well.
Oh, does it?
It does have an exposure to its UK, through its UK arm. And that stock is also up about 5% this morning in sympathy with in response to this legal ruling. There you see. But notice also what it's doing. It's gapped up, but it seems to be trading on the low of the session at the moment, FirstRand. So
what's its UK entity? Sorry, Garth.
It's got the whole Aldermore and that side of it.
Okay.
Which is where it's exposed there. So in any case, it was the one South African bank which actually has an exposure to this UK vehicle financing scandal. So we've been watching that very carefully and watching for a possible breakout there, because there is actually an interesting technical pattern as well on FirstRand. There's an inverse head and shoulders pattern there, which is validated on the break above 77 Rand per share. So we were watching that as a potential breakout area, but this was also always going to be the catalyst for it. And again, it was one of those situations heading into the end of last week where we figured the company's made quite big provisions already for this. What happens if the court ruling comes out and it's not as bad as feared? And that's what we've got. And hence you're seeing these big moves to the upside on these stocks where it's bad news, but it's not as bad as what could have been. So therefore it's good.
Interesting. I haven't traded FirstRand for 13 years now. What's the rest of the business like? Because this used to be the darling of the sector.
Yeah. Well, it still is probably it's not really the darling right now, I think, but it's a good operation. They're a very solid outfit. They're always ahead of the game in terms of technology. They're a more innovative bank than most of the other big four, really. Right. So it is still a favorable play. What's really interesting, though, Rich, is right now in the banks in South Africa is the dividend yields that are on offer are insanely high at this point in time. And some of those banks are giving you dividend yields of 8%.
No
plus.
way.
And you've got a situation right now where the dividend yield is higher than the PE ratio on a lot of these South African banks. It's incredible, the very deep value there. And they're well regulated. It's a very, very well regulated. It's a solid financial sector that they've got there. So these are not, rubbish businesses. These are quality businesses, very well managed, very well regulated. And you're getting these enormous dividends on offer, very cheap valuations. So
Good.
It's interesting.
Okay, wonderful. That's a great heads up there. Thank you very much, Garth, for joining me in the extended version of Expert Edge with all sessions thrown in as well. Chris Beecham coming up with today's trade of the week. Garth, any other diamonds for us as we say goodbye?
Well, Rich, you and I, when I was in the studio last time, we spoke about cable breaking down. And we were both off air. I think we talked about options trades that we've got on with that, looking for a weaker pound and a stronger dollar. That looks like it's working out okay for us, isn't it? So yeah, I'm still seeing cable heading lower. I think it's heading down towards 130 odd, and that would be good. Would pay for my holiday coming up.
Nice. Well, that's it's an interesting one, and of course a big week with the Bank of England rate decision. But it looked like it was heading on its way to 130. But then, of course, we found out that the US is actually going into recession, so they might be in as much trouble as we are. But we'll see. Garth, thank you very much for joining me as always. That was wonderful. We would love to have you back on a Monday, and we'll see you soon.
Thank you, Rich. Have a good week.
Cheers.
Okay, guys, before I teach you how to use this, I have to teach you how to use this. The mind. The cash return wasn't all about speed, it wasn't always about power, it was about the mind. Become the bull. Visualize greatness. Okay, minds are ready. Time to go. Hey, come on, Pat, come on. Cash returns, come on. Oi! Oh, you're not going to get better than cash returns. Cash returns, come on.
Hello, I'm Axel Rudolph, Senior Technical Analyst at IG and Fellow of the Society of Technical Analysts with over 30 years experience in trading the financial markets. I've been following cryptocurrencies from the very beginning, and with IG's new crypto offering, I can finally share my technical analysis expertise on crypto with you. So join me every Wednesday morning for my new show, Charting Crypto, where I'll be answering your technical analysis questions on all things crypto, live on Trade Live with IG.
Bring me the next shiny new thing. Bring me the next shiny new thing.
We're watching a crisis unfold in the UK, and we need to take bold action. Our stock market, once the envy of the world, is in a dangerous downward spiral. At the same time, the UK is stuck in a damaging savings-first mindset with far too few people investing to build wealth for the long term. With our Save Our Stock Market campaign, we're calling on the government to deliver the urgent policy changes our stock market badly needs, from scrapping stamp duty on UK shares to encouraging a shift away from stagnant cash savings and using incentives rather than penalties to get people backing British firms. And to show we're putting our money where our mouth is, we'll be offering every new customer who joins IG across July and August a free UK share bundle. For too long, policymakers have been paralysed by the desire to keep everyone happy. But the time for working groups is over. This is about getting more Brits investing while saving a strategic national asset before it's too late. You can read more about IG's SOS campaign and free UK share offer on our website.
Okay, guys, before I teach you how to use this,
Hello and welcome to Trade of the Week for the week beginning Monday, the 4th of August. Yeah, August is upon us. Where has the year gone? Let's look firstly at this week's trade of the week. We're going to go swiftly into this. This one's especially for Rich McDonald, this one. We're going to go long the S&P 500. Yes, it might seem foolhardy after those job numbers. It might seem like we're just continuing to ignore the bad news. But if you look at this, you've got a recovery over the past, well, a very strong recovery in early trading this morning, and Sunday night's trading very good as well. So we found a low for the time being. That's the key thing here. We've been given a level against which we can trade. And crucially, if you look back to early July, all the way back to a month ago, it was an interesting area because we saw around 6,200 the buyers step in. Whenever we got close to this, as you can see on the 7th of July, if you look to the 16th of July, this is where the buying materialised. So 6,200, your line in the sand, as ever, will give it just a bit more room to breathe. I know it's one of my cliches, but it's still true. You could even maybe nicely got a 50-day moving average coming in here. So we'll go for 61.90 as our stop loss on the basis that if it does reverse, and if it does continue to fall from here, hits that stop, our view that it will now bounce and move higher has been negated. So that's how we're looking at this trade. We're not saying it will go for another 6 months, but if you're looking for a trade of the week, it might well be that some of the negativity around these numbers from Friday has been overdone, shall we say, and that we might see the market continue to recover. There's still a lot going on this week, plenty of earnings coming through, not quite the really heavyweight stuff we had last week, but enough to keep the market busy. But so the trade of the week for this week, long the S&P 500 with our stop at 61.90. Now to look back to last week's trade, not a bad one to start off with. It was long US crude oil. That bounced nicely, particularly on Tuesday. Reports of Trump imposing fresh sanctions on Russian oil, on buyers of Russian oil in particular. But then, of course, you had the reversal on Friday with those poor job numbers. The question, of course, is now, we're still higher where we were a week ago. Can it continue to move up from here? You've had OPEC reportedly increasing production as well. So we'll see whether that one does continue to move higher. So one to keep an eye on. But that, of course, just go back to this week's trade of the week, buy the S&P, long the S&P 500 with our stop at 61.90. Now, if we move on to technically speaking, let's see what we've got on moving this week. We'll start off just with a brief look at the indices. I think it makes sense, really, given what we've seen. We were talking about the S&P in trade of the week. If you look at the Dow here as well, again, a very strong recovery off these lows. Currently trading at 43,800. The low from Friday was 43,300. So a 500-point recovery already. And crucially, if you look at this, your low from the 16th of July was 43,753. We're back above that, not close to above it, we are back above it. So it's interesting already to see the market trying to recover some key levels. Quick look at volatility as well, of course, because here, is this a more sustained bounce? Is this the beginning of another reverse? Because, of course, selling the spikes in volatility has been the way to go since mid-April. As you can see, these rallies, 23rd of May, if you want to call them rallies, these spikes in volatility, late June. This is the first one we've really had from a very low level for vol, so it'll be interesting to see whether this one continues to reverse. So if you're looking at your charting, that's a key one to watch for, that if that continues, usually you'd expect equities to continue to recover from here. So that's the picture we're looking at on volatility. But let's move on to our requests, and don't forget, as they say in the chat, to get the requests in nice and early as well. The earlier the better, really. Let's start with the first one which came in, which was Glencore. So let's do Glencore this morning. Of course, reporting numbers this week as well. So one particularly to keep an eye on. Up just a little bit this morning, about 70 basis points in early trading. Where are we now? Let's look at the long-term view for Glencore, which is always a good thing just to get a sense of where we are. Weekly chart doesn't scream optimism, it has to be said, because though you've had, as so many stocks, the recovery from these April lows, if I could really, recovery from April lows is a sentence that just gets uttered more and more at the moment. But for Glencore, yes, it's come off these lows, but also we really saw some selling come through last week, unsurprisingly. So is this the beginning of a more sustained move to the downside and continuing that weekly downtrend, which has been in place here since early 2023. It does sort of go in fits and starts. You can see sharp move downwards, drift, sharp move, and then a bit of a bounce. This is the latest bounce, the most sustained we've had for Glencore in some time. It doesn't look great though. There's your daily chart. Nice downtrend if you can get it. Of course, moving averages all pointing lower. Sustained rally for the time being. Interesting one, because if you look at the weekly chart, you can argue, okay, it's rolling over. We could be heading back to the downside, maybe a move towards these lows of early April back in play once again. If, on the other hand, you want to take a longer term view, you would argue there's been a fairly constructive recovery. Notably, we're still, can't get my words out this morning, we're staying and holding above the 50-day moving average, which we weren't able to do in September. So you had a bounce there, and eventually it gave way to fresh downside. But you can see there the weakness in late June, then found support just above the 50-day moving average. Again here this morning, up 0.75% in early trading. Is this another higher low? Because it's interesting how this is really sort of provides you with two different views. So on the weekly chart, it's hard to argue for a bullish view. But if you look at the daily chart, maybe the short-term outlook is still positive. You had a bullish crossover here on the moving averages, still below the 200-day moving average though. And as Paul Tudor-Jones always said, bad things happen below the 200-day moving average. So we have to wait to see how that fares. And of course, our line in the sand for the time being, £3.30 a share. That was crucial in early March. One to watch for again over the next few weeks if we do get back there. Moving from one sector swiftly to another poor performing one, UK house builders, Bellway in particular. A bit of a clanger on this one, I think. Yeah, there we go. Let's look at this. Again, I always start with a weekly or monthly chart just to get a sense of where we are. And a whole lot of nothing from Bellway over the past 5 years, which is quite impressive. A lot of house builders look like this in the UK. Big drop early 2020, unsurprisingly, for reasons that we all know far too well. And it hasn't really gone anywhere. It's had rallies, decent rally late 2020, early 2021, miserable year in 2022. Steady recovery since then, it has to be said. But then, again, we just haven't been able to hold those highs. So for Bellway, the weekly chart isn't exactly encouraging. The daily one doesn't get much better either, it has to be said. If you look at this, it's an impressive lack of performance from Bellway to be essentially where it was. Gosh, if you go back to May of 2023, there is this oscillation in the price movement. People clearly picking it up when they think it's cheap, but then dropping it again like a stone or a hot brick when it becomes too expensive. Maybe you can hope that this is the formation of a short-term low here. You had a lot of appetite to buy around 2,200, but it's not exactly particularly encouraging, I think, for Bellway. It's really interesting how the UK house builders, there's so much talk about house builders and house prices and how expensive they are. No one can buy a house. You think it would be good for the house builders. It really hasn't been. And so not a great performance from Bellway. Some signs of buying, as I say, around this 24.60 level. But the short-term move, even leaving aside what we've had over the course of the past sort of 2 years, is not particularly encouraging. A good one coming in this morning because, of course, a hell of a news-driven move here. Close Brothers, 20% gain for a share price off the highs because we were testing over £5 a share for the first time since September in Close Brothers, but just unsurprisingly a bit of profit taking coming through there after that big gap higher. Let's look at this weekly chart. We did look at this chart in the morning show and how, of course, you've seen this huge amount of value destruction from £17 a share down to £2 a share. The brave bargain hunter stepping in late December, maybe hoping against hope that the resolution would not be as bad for Close Brothers as feared. So again, weekly chart, you'd be saying lower high. There is a reason to maybe to look for the short positions because you've got an area to trade against. But of course, on the daily chart, yeah, bit of a different performance. Again, this has an interesting steady uptrend that has done better than the early 2024 one, which took us back to the 200-day moving average and did get above it before. Unsurprisingly, fresh bad news coming through, driving us lower once again. But we're above the 200-day moving average here. Moving averages all pointing higher, which is a solid sign. Maybe some of this froth comes off, heads back towards £4 a share. Those brave enough to buy on Friday, clearly there were some buyers on Friday doing quite well out of this move. So a slightly more positive move to the upside there. And then I think Mobico is an interesting one. A lot of requests this morning, a lot of equity focus, which is good. Mobico Group. And comes with a comment, sale of US business now complete, new CEO, bouncing from the lows, but he already knows what I'm going to say before I say it, because yes, not really a widows and orphans stock, is it, this one? Cheap, but cheap for a reason, perhaps. As I confess, it's not one we look at very, very often, but look at that from 2020 at £4.70 down to 30p at Aston Martin levels of shareholder destruction there. Nonetheless, constructive price action in the short term, if that's what you're looking at. If this move continues, if we see it pushing on from here back to 45p, which was the key low from June of last year, there was the area where the buyers finally stepped in. You got a bit of a durable low until, of course, this profit warning in April. We saw last week the rally top out of 40 pence a share, so there's your sort of short-term line in the sand. But noticeable that your momentum, as measured by stochastics, remain relatively strong. So there you had a bit of a pullback from 40 down to 34. It started to recover, and that suggests that maybe there's a bit more buying pressure coming through here. If you want to draw downtrend lines, if you want to be that brave, it doesn't, of course, bode well for you, because you're kind of, yeah, I think that's not a bad trend line. A couple of touches of it. There's your line in the sand maybe to watch then. Back above 38p, back above 40p, and you can maybe breathe a bit more easily. I don't really draw trend lines very often, but I think it's perhaps a good, useful one coming through in here. BYD, can we look at BYD? Yes, we certainly can. Live television, great when you just watch me type things in. See there, you've got to love the uptrend. That's lovely. That's working out really, really nicely. A super breakout. Very much euphoria clearly coming through here at the peak of the Tesla troubles. BYD was going to conquer the world. Tesla was doomed. Some of that euphoria has been reversed. But if you're looking for a bounce, the 200-day is probably a fairly decent place to find it. That may be the case here. Maybe with some of the more positive news coming through, or the positive atmosphere, I should say, coming through markets this morning, maybe there's a hope that we can find a low at these levels. So yeah, the 200-day moving average, if you're going to use the moving average as support, the 200-day is a fairly good one to use. Seems to be the way it's working out at the moment. Of course, it's interesting for a share price that, again, has essentially gone nowhere since February, working out a lot of this froth. Is that cleared? Can we now see perhaps a more sustained move to the upside on perhaps a more reasonable assessment of the situation? Seems to be that way. Of course, this is how you should look at charts. They're the market really endorsing or not the prospects of the company. At the moment, people clearly think BYD has been overcooked for a while. A lot of the hype has gone too far. The euphoria of seeing them advertise in the West and how they would eat Tesla's lunch seems to have been overdone. Watch to see whether this one, it's not really a low yet because it hasn't really started to move higher. Don't forget, for a pullback to transform into a move to the upside, it has to stop going down. It looks like it's stopped going down. It's not started to move higher. I think the problem a lot of traders face is that they move in too early. They think, oh, that is the beginning of the move higher, where it's simply a pause in the downtrend. For the time being, it hasn't mutated into the caterpillar of the downtrend, hasn't turned into the butterfly of an uptrend, if you like. There's a tortured metaphor for you on a Monday morning. And then last one so far, Mondi back into, packaging. Is that what Mondi does, I think? I could be wrong there. It feels like they do packaging. I could be very, very wrong on that point. Mondi, oh, which one should we go with? Must be this one. It is packaging. Thank you, gallery. There you go. My sad knowledge doesn't let me down. Key points. Packaging and paper, more exciting company. It would be hard to find, really. Again, gosh, people do love their dip buys, don't they, really, on this one? A stock that's been getting cheaper and cheaper and cheaper, and there's the sort of hope dying away with each bounce. So clearly, there's something around the 1,000 level, £10 a share, that is exciting people. Maybe some hope springs eternal after this drop on Thursday. Was it profit warning? They must have had a profit warning last week to cause that move, because that's a nasty move in the share price. But very much downtrend here, reasserting itself, unsurprisingly. So maybe you get a bit of a bounce in the short term. We're looking for levels that it needs to get back above to bit more optimistic, then that £11 a share level will be the first one to watch. That's from early May. And then you've got that late June low at £11.33. You're not going to make me do Vodafone. Is that really true? It's like a Vodafone show on this place. Oh, actually, I looked at Vodafone and I even thought about Trade of the Week, to be fair. So I uttered the immortal words, actually, it looks quite constructive at these levels. So there you go. I feel bad just for saying it, really. But there we go. You see, you like that move higher. It's very, very encouraging. If you just look at, well, let's go to the monthly chart, because I think certain persons in the gallery. There you go. That's like something's causing it to move higher. Technicals only in this. Let's keep the news out of this. No news, please. This is just technicals. This is Axel show. He doesn't believe in news. Very fervent believer in technical analysis. Alutrans. 50-week moving average coming through at 89. So let's see how that fares, because the last time we got up there, 2022, which was a bad year for markets, has to be said, it didn't like it. So let's see what happens the next time it gets back to the 50-week moving average. This time it might not care, but we'll see. But if you're looking at this purely in the short term, nice little pullback from those highs. Some of that euphoria. I wonder who drove that euphoria, but that seems to have come off a bit again. Just looking for a catalyst to move to the upside, back above 84p might be the kind of thing you're looking for. But constructive price action from Vodafone. Perhaps the FTSE 100s after Monday is perhaps the most boring stock in the index, but there we go. Thank you very much, everybody. Axel will be back next week. You'll all be delighted to hear, or he can comment on how awful the Trader Week has been in his absence. But thank you very much. We'll see you again on Wednesday, though, of course, for Charting Crypto. And don't forget to like and subscribe.
Welcome back to Man vs. Machine, the show where an artificial intelligence LLM goes head-to-head with human intuition and investment experience. I'm Martin, and this is Aaron, and we're here to find out if a multi-billion-dollar LLM can take on good old-fashioned human judgment in building investment portfolios. If you're new to the channel, here are the ground rules. Essentially, each week, we put ourselves in the shoes of a UK retail investor, and we give the free version of ChatGPT 2 simple prompts to analyze and build an investment portfolio. Then Aaron and I take that portfolio and try and optimize it. We're looking to enhance the returns and reduce risks. And last week, we had set the foundations for the AI and the human portfolio. We'd given ChatGPT 2 prompts to create that baseline portfolio. This week, we're looking to take a look at the performance and see how the two portfolios are going so far.
Absolutely. So, as Martin said, there are a few ground rules which we're very much obeying with regards to how we construct the portfolios. So they're on the screen right now. But I think I'm going to actually ask ChatGPT, how have the portfolios done, ChatGPT?
Hey there. The portfolios have done pretty well over the past week. The human managed portfolio had a slight edge, outperforming the AI portfolio by a small margin. Some of the standout performers in the AI portfolio were Nexera Energy and Lockheed Martin, while the human portfolio benefited from strong performance in the tech sector and energy stocks. Overall, both portfolios are off to a solid start.
Absolutely. So you will now see our performance on screen. So we were up 0.56%. AI was up 0.46%. And our benchmark, which is essentially it's a basket of 80% MSCI World equal weight. So all global stocks, but equally weighted, the MSCI World Index, plus 20% cash and ultra short bonds to give it a similar asset allocation to how we've built our portfolios. So we have beaten those benchmarks. Both the human and the AI has done that. But I guess you're all wondering how we managed to do that. So if we look under the bonnet of the portfolios, firstly, let's look at what's driving them. So with regards to the AI portfolio, all sorts of instruments in there. There is certainly a skew towards that sort of cleaner energy theme, that sustainability, but interestingly, a little bit of defense and some big names in some defense and single name stocks. So you've got the likes of BAE Systems, Lockheed Martin, who are playing a role in that. We go into the drivers of this performance. I think what's quite interesting here is you're seeing the likes of BAE Systems, which had a little bit of a bad week, be quite a significant drawdown on the portfolio. Whereas Nexera Energy, really strong week, and Lockheed Martin, which was a beneficiary of the EU trade deal and the expenses towards European Union buying US defense equipment, had a really stellar week, whilst equity markets have done quite well over the course of the week, just up around 1%. We go on to our human portfolio now. We can see it's a bit more going on there, very diversified. We tend to go for more of a geographical skew within the portfolios rather than AI going for sort of a world equity exposure. I think interestingly, we've added gold to the portfolio. We've also added Chinese internet tech exposure, which we think is going to be a big beneficiary, and has got an interesting growth story. Whilst we've also gone for the defense trend, but we've done it in a different way. We've gone for a defense ETF with more exposure to the US. And this has actually been really beneficial over the course of the week. If I go on to the next slide, you can see that this defense ETF is up 1.5%, broadly speaking, whilst when I had it on the previous screen, we saw that BAE Systems was down well over 1%. So this just shows that when you're picking single stocks, there is a degree of idiosyncratic or single stock risk, which sometimes having a diversified approach to the theme you can avoid that. Well, I mean, obviously we're pleased with the performance, but I guess let's see how our AI competitor thinks we've done. ChatGPT, do you think Martin and Aaron have done well, and how so?
I think Aaron and Martin have done a great job in curating their portfolio with a nice mix of assets. They included some strong performers like the NASDAQ 100 and S&P 500, which really helped boost their returns. Plus, their combination of regional diversification and a bit of defensive positioning with assets like gold and defense ETFs showed that they put a lot of thought into balancing growth and risk.
Interesting. Yeah, I would agree with that. I think, we've added something which is quite diversified to the portfolio. So we've gone outside of sort of traditional asset classes by having the gold, just outside of traditional equities, as I say, to add that diversification feature, which has been quite useful. Certainly over the course of the year, portfolios, it's been flat for the week as the performance shows that the gold exposure, but a nice area to add diversification from sort of an active management perspective.
Okay, so we've now looked at the portfolios. We looked at what was driving those portfolios over the last week. We've seen that our performance has slightly beaten the AI portfolio. That being said, that 56 basis points does translate to 29% when annualized, so not too shabby. What I want to do now is take a look at the prompts for rebalancing the portfolio for next week. So first prompt is that we ask ChatGPT again is to provide a comprehensive rundown of current market conditions for a UK investor. It's come up with sort of 3 key areas: central banks and policy direction, risks and equities. Let's dive into those. Aaron, take us through them.
So with monetary policy, it's been on the investors' agenda for, I'd say, probably 3 years. Hikes, cuts, when they're going to come, how quickly they're going to come, and that's still driving the narrative around monetary policy. We obviously saw that, yesterday the US not cut rates. I think it was broadly expected for them to wait till at least August, September, and then probably November time before rates are going to be cut. And ChatGPT has acknowledged that, saying that rate cuts are likely in August and November, and it understands that when you cut rates, it's quite bullish for equities and corporate bonds and risk assets in general. So it's got that ticking along in the background. Risks to monitor as well. Something that we've spoken about extensively is the weakness of the US dollar, and also the escalations of potential trade wars. Obviously, we've seen trade tensions fluctuate quite significantly.
Yeah, well, I mean, we're seeing the tariff wars actually simmer down slightly. We've now had this deal reached with the EU, which really puts the favor towards the US. I think we've spoken about it briefly, about how the US, particularly on the defense stock side, emerges as the winner. We saw that with BAE Systems earlier and with Lockheed Martin, and just what separated the two. BAE Systems now building a huge order book. They're up $175 billion in backlog. BAE Systems orders falling 13% actually. So a heavy skew towards US. And this is also on the back of the big, beautiful bill, Donald Trump's major push for fiscal spend in the United States, which already favored the defense stocks. How does that play into things here like inflation shocks that ChatGPT is looking at as a risk?
Well, tariffs have the potential to increase inflation, and I think that's been noted by many different, economists. It's widely noted, and I think that's a concern for many policy makers and investors. Are if we get rising tariffs, or if tariffs come in higher than expected, even though we've seen trade tensions simmer down, what are we going to see inflation figures come to? Because that ultimately drives prompt 1 or the paragraph 1, which is central banks and policy direction. At the moment, we've seen inflation around 2.5% to 3.5% in the US and the UK. Those are the sort of main markets we're looking at the moment. Eurozone, it's come down quite significantly. But I think what's the concern is that in the UK in particular, we've got rising food inflation. We've had a service inflation, which has been lingering around higher levels for way too long. And the Bank of England, are concerned about that. And in the US, we've got also inflation in certain areas, most notably some of the core areas of US inflation still ticking along at slightly higher
and
levels.
I think that weaker US dollar is also going to play into some of that inflation.
Definitely. You get imported inflation, which is economics. You learn that in economics that, if your currency is weaker, it's going to cost you more to bring in goods. So another thing that ChatGPT picked up on was China having a little bit of a slowdown this year. The FTSE underperforming, not year to date, just over the course of the week, because year to date it's actually been really strong, up in excess of 10%. But also it's noted that the FTSE 250 is doing better. So it'll be interesting to see how this bakes into ChatGPT's recommendations for the portfolio.
Okay, so now we're on the second part of the portfolio. We're looking to see if ChatGPT wants to do any rebalancing. And we're not forcing a rebalance, but we're asking it based on the market information that they provided. Do they recommend any changes to the portfolio? This is what they've given us. Do you want to just take us through these?
Yeah, absolutely. And I think what's surprising here is it's made a really big push towards getting rid of clean energy and adding sort of UK names. So it's adding UK dividend ETF, which is likely to be large income generating defensive stocks, which complements the iShares world ETF that it's got in its portfolio, as well as adding gold to the portfolio, which is something we introduced in the first week. And I think it notes that it says here that it's hedging against stagflation, policy shocks, and rate volatility, which we've spoken about. What I find quite surprising, though, is it's very quickly decided to roll back from the clean energy theme, which sort of from an active perspective, one would take a look at a theme such as clean energy and look at it for the longer term. But it's already decided within a week that it wants to roll it back at a few percentage points. So that's something that's quite interesting. So we're going to upload these changes, see how it performs, and then let you know how it performs next week. So thank you very much for tuning in to Man vs. Machine, and we look forward to seeing you next time.